Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and other important aspects of working for yourself, being self-employed, running a small business. So today we're going to talk about knowing what expenses you can claim for your against your sales for your taxable profit on your self-assessment tax return. But before we do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you will easily be able to refer back to this information if you should need to, as well as being able to find other important information on a whole host of different topics, all aimed at supporting you and hopefully helping you to be successful in your self-employment. So back then to making sure you know what to claim in your business expenses if you're self-employed and completing your self-assessment tax return. Now, of course, if you have an agent or you've engaged the help of somebody to complete your self-assessment tax return, then they will be able to guide you, and they should be making sure that you do claim everything that you are allowed to and you don't claim anything that you're not allowed to. Just a note on this: if you are using somebody to help you with your tax return, you should make sure that they are qualified to do so, that they're a member of a professional body, and that they have professional indemnity insurance. Because ultimately, even if you are using somebody to help you, you are still responsible for what is submitted to HMRC. And if anything is claimed that is not allowable, you are the one that will receive the penalty for that. So it is important that you still do have an understanding yourself. And of course, if you are struggling to understand what you can and can't claim, then of course it is advisable to use somebody to help you to do this. So the important thing to remember is that in order to claim expenses, so what we mean by claim expenses or allowable against tax, all these sort of jargon things that really sort of mean the same, is ultimately what you will be doing in your self-assessment tax return as a sole trader is letting HMRC know what your total sales is, or sometimes known as turnover, your income, all different words again that mean the same thing. So you'll be letting them know the total amount, and then you will be telling them what expenses you've incurred in generating those sales. And by taking the expenses away from the income will give the total profit, and that is what your tax is calculated on. So your tax and your national insurance, in fact. So you can see that it's really important that that profit is accurate. And to do that, it means that it's important that you have correctly included all of your sales. Of course, that is generally easier to do, because if you've made a sale, if you've had some income, then it's a sale. So there's no question of it. With expenses, then of course you will have a whole different range of expenses that you may have incurred. The important thing to remember is that for an expense to be allowable, i.e. to include it in that section, it needs to be wholly and exclusively for business use, which means that it must be the business use that has incurred that expenditure. And of course, quite often with sole traders, there may be some things that you sort of share with your business and your personal. And in these instances, of course, it's important to apportion the things, or you may be able to use simplified expenses, is where you just use a set amount that covers all of that to save having to work it out. So it's important that you understand exactly what you can claim, that you understand how to make it as straightforward as possible, so that in the event that you had an inspection from HMRC, i.e. HMRC are saying, well, you told us that you had this much sale and this much expenses, show us the proof of it, that you can do that easily. And obviously, if you've made things very complex, or if you haven't kept all of the information or all of the records correctly, you won't be able to do that. So it's important that that you only claim the things that are allowable. There's a lot of information on gov.uk if you're unsure, if you've got a specific item that's perhaps a little bit different and you're not entirely sure, you can always phone the helpline to ask them. But I would suggest, if you are finding it very difficult to know what you can and can't claim, that you really should be probably then thinking about having someone to help you. But there's not actually any reason that you can't do your return yourself. But also it works the other way as well. So quite often people say, oh, I paid this out, I wasn't really sure whether it was allowable or not, so I just didn't claim it. Well, if that was an allowable business expense and you haven't claimed it, you're not going to get any brownie points for paying more tax than you need to. Of course, you need to pay the tax that you that you genuinely do owe, but there's no point in paying more tax by not claiming things that you've paid out. So if you're not sure about something, then, as I say, there's lots of information available. There's lots of information in our videos that may help you with things that you may have forgotten to claim. But the thing that you need to think about is, if you are operating as a sole trader, let's say that your profit is over the personal allowance but under the high rate tax threshold. Let's say that you're sort of in that bracket, so you're paying tax at 20% and you're paying national insurance at just over 9% now. Then for every £100 of expenses, effectively that's going to reduce your tax by almost £30. So if you didn't claim £100 of legitimate business expenses, effectively you're paying almost £30 to tax too much. And then obviously if you multiply that up, if you've got lots more, then there's just no benefit to you of paying more tax than you need to. So much as it's important to make sure that all of your expenses are allowable and you're not claiming too much and therefore paying too little tax, then it's also important to make sure that you are claiming what you are allowed to claim, to make sure that your tax is actually accurate. So hopefully this helps you to understand the importance of making sure that your records are accurate, and that then means that your profit that you are calculating on your self-assessment tax return is accurate. Ultimately, that will make sure that your tax and national insurance liability is accurate. Thank you very much for watching. Goodbye.